Welcome back to Wealth Lab TV, where we make finance, business, and investing simple, modern, and achievable. In today's episode, we're comparing two very different approaches to investing: day trading and long-term investing. You've probably seen videos of traders making fast profits on their screens, and others who quietly grow their wealth over decades. But what's the real difference? Which strategy actually works for most people? Let's find out. Section 1. What is day trading? Let's start with day trading. Day trading means buying and selling stocks or other assets within the same day. The goal is to profit from short-term price movements. For example, a trader might buy a stock at $100 and sell it at $100 an hour later, aiming for quick, small profits that can add up over time. Day trading requires constant monitoring of the market, technical analysis and chart reading, fast decision-making, and a strong tolerance for risk. It's like running a small high-speed business. You're active, focused, and your results depend on your discipline and timing. Section 2. What is long-term investing? Now, long-term investing takes the opposite approach. Instead of trying to make money in a few hours, long-term investors buy quality assets like index funds, ETFs, or strong companies, and hold them for years or even decades. The goal is to let time and compounding grow your wealth, rather than chasing short-term price changes. Warren Buffett often says, "The stock market is a device for transferring money from the impatient to the patient." Long-term investors focus on fundamentals, not noise. They let their investments work for them over time. Section 3. Pros and cons of day trading. Let's break it down. Pros of day trading. Potential for fast profits. You're in control, buying and selling anytime. Exciting and highly active. Cons of day trading. Very risky. Most day traders lose money. High stress and time commitment. Transaction costs and taxes can reduce profits. Requires advanced knowledge and emotional control. In short, it's not impossible, but it's not easy. Day trading is more like a profession than a hobby. Section 4. Pros and cons of long-term investing. Now let's look at long-term investing. Pros of long-term investing. Easier to manage. No need to watch the market daily. Lower taxes and fewer transaction costs. Proven strategy for building wealth. Takes advantage of compound growth. Cons of long-term investing. Slower results. It requires patience. Market downturns can test your confidence. Some investors find it less exciting. Still, history shows that long-term investors, especially those in index funds, tend to outperform most active traders over time. Section 5. Which is better for you? So which strategy should you choose? If you love research, quick decisions, and can handle stress, day trading might appeal to you. But it's a skill that takes years to master, and you must be prepared for losses. If your goal is to build wealth steadily and you prefer a hands-off approach, long-term investing is often the safer, smarter path. Remember, investing isn't about excitement, it's about results. Slow and steady truly wins the race. Here's the reality. Over 90% of day traders lose money over time. But almost anyone can succeed as a long-term investor, with patience, consistency, and discipline. You don't have to pick one extreme. Some people invest long-term while keeping a small trading portfolio for learning and fun. The key is to know who you are and what you want. So to recap, day trading. Fast-paced, high-risk, short-term. Long-term investing. Steady growth, patience, and compounding. Whichever you choose, make sure it fits your goals, your time, and your mindset. In our next episode, we'll talk about how to research a stock before you buy it. The essential checklist every investor should know. If you found this video helpful, give it a thumbs up, subscribe to WealthWave, and tell me in the comments. Would you rather trade daily or invest long-term, and why? Until next time, remember, it is not about timing the market, it is about time in the market.